Hello, Warriors. Today we're in the eye of the hurricane, and the back wall passes tomorrow with the NFP. How are you, Sinatra? Hi, Blake. Happy Thursday to you, boss. Richard, Bran. Feels like Friday.
Hey
Paul,
Dale,
yeah,
a very, very early good morning to you. Just wanted to mention we
ECB.
have yeah, in 15 minutes. So
Okay, all right. So I'll say hi fast. Hi, Mike. Hi, AJ.
that's not it. I just wanted to remind you so we don't bleed
I
into it.
know.
All right.
I know.
You're trying
I'm
to be
kidding.
funny. I got it. I got it. I got it.
I'm just trying to be quicker. That's Patrick, AJ,
No, I
Glenn.
think people love the shout outs. I do.
Yeah,
I
Ryan's
mean,
here. Kman's here. Full team today. James Groom, Brand. All right. Nuno Martins. That's a new name to me, unless I'm senile, which is, possible. Welcome to Face, Nuno. Okay. So let's talk about yesterday first. So we talked about, I thought this was going to happen if they didn't ease, but it happened anyway, right? So we had this little false breakout over I'm sure people here were saying breakout. So that was the plan. That's what happened. And, it worked at least for a day. Tomorrow, who knows if we get a strong number, what could happen. So, you know, still really to have a confirming signal, need this to be taken out. Okay, so if you're short going into it, 136 is a new signal, an add-on. Okay, and Euro, I don't know. Euro and cable look like a coin flip to me. Almost still think that we could head lower down to here for a real good buy in Euro, and cable's even weaker today for the first time. So I think this 2620 is doable, but it's roulette, right? You put on a position in front of the NFP, and all your technicals could be lined up and then blown out of the water in 5 seconds. So I'd rather react to it. It's still holding, core short and Dixie. Looks like it wants to make another run, maybe to 460. Looks like ABC for A and then B, and now we're in C. So that's the way that looks to me. Gold rallied big yesterday, and maybe that's it for one more break, and maybe one more break to 29, and silver too. So that all implies that it might be a stronger than expected number tomorrow if that scenario plays out. If it's not, silver's going to go and euro's going to go. Aussie, I think there's, all of these look like a buy about 100 pips lower. So, it's no man's land to me today. Are we in no man's land today, Ryan? Good morning, buddy.
Morning, mate.
Yeah.
Yeah, was your dollar CAD example shows that perfectly. I thought maybe we get a push to one edge or the other. We couldn't really even get there. We just hit some short term highs like you had. Up in
Yeah,
that
we
137.40.
only took we only took these stops out. I don't think we got these.
Yeah.
The high was
But-
37.43. I think they
So
let them stand, yeah, by 2 pips.
yeah, so we've had another central bank joining the rate cut parade, and look what it's done to FX. Absolutely nothing. So yeah, this is the market we're in at the moment. The market knows where we're going. All we're trading around is how quickly they cut or how slowly they
Yeah,
cut. In the case of dollar CAD, so yeah, we're in a flux. We're in range trading. Trust your levels. If you see them, it's going to take big news, and you've got to roll with the punches between one event and the next event 5 minutes
yeah,
later. If you get
yeah.
profits, take them, book some money, leave a little bit on if you want to for interest, and just snipe away.
Well, I'll tell you what, the yuan has held up better than US dollar yen,
I think
and
that one's
does
more asleep than euro sterling.
Yeah, I mean, but it doesn't look like new highs are a layup. This was a confirmed high that we're going to get new highs here. In Kman, you have a comment on the one?
No, the PBOC is still keeping it in check. On the other hand, Stel kindly showed us the money supply in China, which is as expected. It's roaring higher. They haven't been doing anything else but injecting liquidity. So it's just hanging around there. I think sooner or later, unless something dramatically happened to the dollar, of course, on the back of data. But I think sooner or later it could trade higher. Yeah, I mean, it's just one to I'm not going to say ignore. You can trade it on the back of the Asian stocks if you want. But there's very little to really see there. You're talking about those moves. You're talking about 0.3, 0.4%. It's not something that's very interesting on a currency pair like that, you know.
So it's very well managed.
Oh, of course. I mean, if it goes higher, they send out the submarines to sell some dollars, and if it comes down, then they know that the Chinese themselves are going to probably sell a bit of yuan and buy other stuff. So yeah, it's a difficult one to trade, that one, for now, unless you're short, like Ryan is from the Middle Ages, and or you are long from down below 7, and you just wait and see what the next bigger move is going to be. I reckon it's still going to be higher because of whatever happens geopolitically and stuff, but it's just stuck right now, and there's nothing really to do in it, unless you want to. It's even one that is too difficult to day trade.
Okay. All right. So I'm not going to bring it up again.
Well, you can when we start to break. You know, you do a Harry Hindsight.
Right.
And then you come up and say, like, you see, I told you so.
Let's just ignore it. We're ignoring you, China. All right. Anyway, Ryan, so ECB, what are you going to be looking for? Is it mainly in the presser?
What they do today is largely irrelevant. You know, it'll be a shock if they don't cut. So we know a cut's coming. It's really all about what they do next. I think probably the likelihood is it's the same as the Bank of Canada. We get a cautious cut, not not going to rush into doing any more very quickly. But that is obviously the price risk. So I don't think we'll get a hint at a quick cut coming in July. They'll note the risks. They'll probably say, look at CPI. In the last print, it went up. We expect CPI to rise a bit, so we're not going to be rushing with rate cuts. We could have a situation where perhaps the euro's just waiting to get over that risk, because I think the path of least resistance is still higher. But if we get all that and we haven't broken 109, then we're still in the box, and we move on to NFP. And but as you know, I'm long euro sterling, and that one's right on the bloody level.
It sure gave up. I thought this move was it, the low, and it still could be. It's still a higher low. It's got to do something right from here. Otherwise, you're looking at a third drive scenario.
Yeah, I've moved all my stops sub 84 just to stay out of any any shenanigans over the number. But if it doesn't bounce after this, then it's going to be a bit worrying.
Yeah. Would that tell you anything about the dollar, since the euro is going to be weaker than cable if we break down and start really moving to the downside? And that was my initial thought before we had a few rallies, back to here.
Yeah.
So
we need something really dovish to get the euro moving south, and I just don't see that coming. There's no need to be uber dovish from the ECB. They're not going to be hawkish, but there's no need to be really dovish. So fundamentally, I see no reason why the euro should collapse, be it against the sterling or elsewhere. You know, the Bank of England's probably going to be starting to cut as well at some point. So, you know, there's only going to be a short period of time between different rate divergences. But we're on the level. We can't get away from the level. And that's always concerning.
Look at this. Forget what the title of the chart is. Now look at this.
Yeah.
Why should there be a pattern similarity between USD-CAD and Euro Pound? Can you think of anything?
They're closely correlated currencies, aren't they? Geographically.
Yeah, I guess that's what you. Okay, you mean Euro Pound in Canada? So I mean, look, these are like the same sideways patterns that we've had in CAD for a long time. It's just like Euro Pound.
Yeah, well, Canada's your neighbour, and the euro is our neighbour. You know, it's the same as Aussie Kiwi. You know, similar thing for Aussie Kiwi.
All right.
There's a proximity.
Oh, I get it. Canada is our neighbor. So
so it's a close trading neighbour. Yeah.
Okay, we're like cousins, or.
Well, according to them, you're Canada's shorts.
Oh, are we?
Canada's trousers.
All right. At least I think you need long pants there. Anyway, any comment on Kman on silver? Do you think that was it yesterday?
Well, we've had that move under 20, under 30. I had my first shy little add, and patiently waiting to add more if we get down in the 28s, even 27 or so. But I'm really not in a rush. I just want to see what the rest of the US data are going to give us. Regarding the Canada, I think tomorrow is going to be an interesting day when we will have the double whammy between the US and the Canadian job report, especially coming on the back of the Bank of Canada cutting. I think we are in a complete waiting pattern here right now on the Canadian dollar, and then we'll see what happens with it tomorrow. Tomorrow is going to be a biggie, I think, for the Canadian dollar.
Okay.
We're 2.5 or so minutes away from ECB.
Yeah, go ahead. So I'll let Blake take over. Blake.
Yep, I'm here. So I'm gonna go ahead and grab the screen really quick. And good morning, Ryan, Kman. Good to see you guys. And obviously I said good morning to Dale. And good morning everybody else. The euro right now, just kind of share with you where we're like bouncing between. This is an hourly chart, and you can see the from the low back here, you know, around the gosh dang it, hold on really quick, let me delete something real fast. Give me 1 second, guys. That's not what I wanted to do. Let's get there. There we go. All right. So, you know, when we're looking around the 108 level, 107.85, we've dipped down to the 38% retracement. That's basically where we're at. Yesterday, we did a little false breakdown below the 108.60, which I thought was a nice little shakeout. You know, it took us right back above or to 109 in Asia. And now we're just kind of sitting there, just holding these levels, and it's going to be really, support is going to be around the 108.50, resistance around the 109. I just took the data flash, pulled that up from ForexAnalytix, and we got just a couple of minutes. As you pointed out, Ryan, just a minute ago, the ECB is not expected to well, they're expected to cut rates. They're not expected to leave rates unchanged, but it's not like they're doing anything that the market's not expecting. The one thing I'm gonna say here is, when you look around and you look at what happened with the dollar Canadian yesterday, and this is just something I want to talk in general terms around the dollar. The euro's just nudged up against resistance. Sterling's up against 128. Aussie's, knocking its head against 67 cents. Kiwi knocking its head against the 62-cent level. The dollar looks very vulnerable. And even you had the dollar, the Canadian, that we are expecting the Bank of Canada to cut rates at least a couple more times this year. The dollar CAD couldn't even sustain above 137. It's really, I think, more of a dollar story, but today is obviously a euro story. But the dollar as a whole looks pretty vulnerable, except against like the Mexican peso. That's the only thing right now. But anyway, rates, here we go. You guys should be any moment.
Cut 25.
Cut 25 as expected. All right. So the euro is doing absolutely nothing. So now we got a couple of things that actually might move the market moving forward. We have the weekly unemployment claims in 15 minutes. Remember, this is the most real-time payroll information we can get. By the way, the euro is getting a little bit of lift. Sell the rumor, buy the news. That's what we're seeing probably in the euro right now, unless you're seeing any headlines that that are from the ECB statement that you might see that might be moving it, but I doubt it. What may move the market is the weekly unemployment claims.
Revised a bit higher.
What's that?
Inflation revised a bit higher.
Yeah. Well, isn't that going to be a common theme? So this is the conversation I had yesterday. Well, I think we had it here. Definitely had it on the trade-off last night on the show with Chris Weston, and definitely on the daily roundup yesterday. The problem right now that the market's going to have to get into grips with is that inflation is sticky everywhere. And just because a central bank is going to cut rates, because they basically told everybody they're going to cut rates, so they had to do it. But as you just pointed out, Kman, the inflation forecasts have now risen, and so people are going to have to come to grips with the idea that this rate cut campaign, you can call it, from whether it's the European Central Bank, whether it ends up being with the Fed or any other central bank for that matter, it's not a straight path. We could actually get a rate cut, and then the ECB could end up hiking rates again should inflation flare up again. And if their inflation forecasts are starting to go up, and let's just say growth stays the same, but inflation starts to tick higher, the ECB can undo this. And I don't think the market really understands that, or at least hasn't priced in that concept, right? Everybody thinks, oh, look, we just raised, like you just take the Fed. Oh, we raised the rate up. Sorry, it's so early in the morning. We raised rates to 5.5%. So rates are going to automatically come down to 3% now, like automatically. Like that is what has been set in stone by the gods in the markets. Rates will come straight down to 3% now. Your European rates have risen to 4.5%. They are obviously going to come down to 2.5% now, and that's just. I don't think that's going to be a reality, and I think the market's going to have to come to grips with that. What are your thoughts on that idea, Ryan? Let's start with you.
Yeah, well, then they're not going to take the risk of running victory laps and saying everything's done because they don't want to get bitten in the arse like they did when inflation was rising. So yeah, they're going to keep that optionality in there. They're going to keep it's in all the statements, it's in all the press conferences. Ready to act on the other side if need be. They're never going to give that up because it's a credibility thing. But who knows? Inflation could bottom around here and could go sticky like we've seen in the US. And if that happens for any length of time, the chances are that it's going to start creeping higher again, purely because prices catch up and they stay the same, and then we've always got inflation, no matter how low, unless you're in Japan. So, yeah, they're going to be scared about it, but they need to get rates down so they can hike them again when they need to.
How about you, Kman? What are your thoughts here about rates? Do you have any additional thoughts on this subject?
No, it's again a cautious cut. Data dependent. They don't know what to do next. Just a bit like the Bank of Canada was yesterday, right? Just on a different scale, I will say. So it is possible that the market is viewing this as really 1 and July not completely done, but we will have to watch Lagarde. Now back to your question on the global theme. I think it's more likely that other central banks will hike than the ECB. I think a hike by the ECB is over my dead body, really, if they can't do anything else. Or if the Fed is obliged to hike for some reason, then perhaps the ECB may do as well. But I don't see ECB with the current economic growth a hike anytime soon. That is thing. But they could wait, because they did say something about. Of course, they all say like independent from the ECB, but from the Fed. But some of them said like, we will look at what the Fed is doing if it has an impact on the euro. So if the euro completely dumps, then they may be stickier for longer. But I don't think ECB's. I don't right now. I can't see, even if inflation ticks up or is sticky, I can't see them hike. That I can't. But okay, they can be higher for longer as well. And it could be that we are one and done for an extended period here.
Yeah. Yeah. All right. Extended period. And I don't think the market really understands what extended period means, which could end up being a lot longer than they think. Higher for longer might actually be a thing. The dollar index, this is Dale.
I have a comment on rates.
Yeah, go ahead.
I've been looking for lower yields, and I think that the 10-year can make a technical case for about 370. And then I'm looking for new highs in yields into the end of the year.
Okay.
So,
new highs and what would be
360?
What would be the cause of that, do you think?
It's going to be a bear market in the dollar. It's going to be inflation numbers. It's just like right now. A week ago, they were really pushing back against rate cuts. Williams came out, everyone, and that was a peak. I really think the Fed follows the market, and the market doesn't follow the Fed. So that's why he's always dancing around. When the bond market's looking okay, he'll talk more dovish, and when it's under pressure, he'll be a little more hawkish. So I really think the guys that make markets, big position people in the bond market, they drive the action, and the Fed catches up and makes it seem like they're the ones conducting the orchestra.
Well, I'm gonna tell you guys this much. I look at looking at the dollar. Sorry, I gotta get back over to it. And I think you just adjusted your mic. I think you sound a little bit better there, Dale.
Yeah, I moved it closer.
Yeah, that's definitely helps like 1,000%. Yeah, because you put your mic up above your head, didn't you? Anyway, well, that happens when you're trying to drink a cup of coffee.
Yeah,
because I've done it before for many years, buddy. I've used to wear a headset for many years. So the dollar index broke below channel support here. We're below the 200 DMA, and we can't get back above that. And that's pretty telling to me. I know the dollar's flirting with a lot of key levels, and I want to show you guys how important these key levels are in the market. So, when you have the euro, you have the 109 level, 110 is obviously going to be a big deal. I've made the case all week this week. If you listen to the if you're on ForexAnalytix in the community, you listen to the Morning Edge, you listen to the Daily Roundup, which are private for our community. I've built the case why we're going to 110 this week. We're going to 110 is, I think it's pretty much done, and I'm long euro as a result. But you got sterling pushing up against really key resistance. It's not falling. Let's just put it that way. Yeah. You got the Aussie that's nudged up against multi-year trend line. That's post-COVID lockdown highs. You got the Aussie, or excuse me, the Kiwi multi-year trend line. We're at it at basically 62 cents. You got the Swissy, which is obviously probing support, but the Swissy is going to be doing its own thing, I think. The dollar CAD failed breakout yesterday. Dollar Norway broken down and has some lower levels to go just to get to channel support. Dollar yen is is obviously the standout right now, which if you're looking for dollar strength, this is the place to be because it's not bearish until you get below this channel support. But I never treat the dollar yen as the same as I do other dollar pairs. But the fact of the matter is the dollar looks very, very vulnerable. And I'm really in the camp that the euro is going to be trading up towards 110. All we need is an unemployment not unemployment claims today, but unemployment rate
NFP.
tomorrow. Yeah, well, unemployment rate to be at 4% tomorrow, even if the headline number is above 150, unemployment ticks up to 4%. That might be the catalyst that drives the dollar lower. But hey, we got a few minutes going into before we get into weekly jobless claims. Let's go around the board really quick. Dale, what's hot on your radar for today?
Nothing, because tomorrow's the day.
Tomorrow's the day. So today you're not
Tomorrow's the day.
Okay.
Yeah, I mean, I'll hold my Canada short and my Dixie short, but I'm not adding today.
Okay. All right. Ryan, what's hot on your radar today with euro sterling once again bouncing aggressively off that 85 pence level?
Yeah, there's the candle
Yeah.
you needed.
Yeah, very much so. Yeah, I'm keeping an eye.
Yeah.
I'm just deciding whether to take a bit off. Now we've had this bounce. If I see 30s, I think I might just reduce some of my 20s off of that. Dollar Mex, I'm in that one as well.
Yes, I love it.
Just into that 1740 level. I got in at 47, and I had a bid in at 43. We didn't quite get there. I've just taken a bit more off 1762s. So I haven't updated that yet. Naughty me.
So I'm gonna go back to last night. I want to show everybody just one of the things that we were obviously talking football this morning in European hours. I was just seeing all that. I wanted to show you guys this chart from where is you know what? I'll just do it this way rather than going back and looking for. No. I'm gonna do it this way. I'm gonna just show you guys something about the dollar mex really fast. I think you guys will find this very interesting. Let me go dollar mex. Let's go to the daily chart. For those of you that know how I'm following this on the Wyckoff strategy, I even have my youngest son who's in the trader funding program right now. He's trading this, but let me just show you exactly where we're at. If you want to map this out. So, oops, shoot. Let me do this again. I have to go a little bit further out. There we go. Okay. So there's a little freebie for you guys as our F.A.C.E listeners. So there's your selling climax was right there. Your low volume breakdown and reversal was right here. Your initial breakout right here is right there. And we're currently right here at the jump the creek. And that is at your 1740 level. And that's why I'm selling a bunch of Mexican peso. I have been for the last less than 24 hours. So I'm already putting myself back into the peso with you, Ryan. So I love your idea. I'm with you, buddy. All right. Kman, what are you thinking?
I'm sorry, I thought Ryan was saying something.
Oh, go ahead, Ryan. Finish up your thoughts there.
I'll just say good to know. Good to know.
Okay. Yeah, I mean, I'm also really waiting for tomorrow for a big day. But the thing that strikes me really after the ECB decision is the euro crosses, especially catching a bit. So it's a global theme there. We see euro antipodians. We see even the euro mix, as you were already talking about the mix. We see the euro sterling. We see all those, and the euro yen is back above 170 as well. So that may be the theme for the next let's say 24 hours until we get the big US and Canadian jobs reports. That looks to be the case, yeah. Because the rest is relatively stable if you look at the yields thing. Just if I may, one more thing is that we had a really good Japanese 30-year auction overnight, and one can see that on the back of those comments that Nakamura, who is a real dove at the Bank of Japan, he was a dissenter, by the way, not wanting to hike the last time, but also Ueda. They are mostly talking about adjusting JGB purchases, but they seem to fight back a bit against expectations for a possible rate hike this month. So that may be the thing to watch there on the yen. Perhaps those yen pairs, either way, keeping a bit of a beat.
Okay. Thank you very much, Kman. And then also the initial jobless claims came in worse than expected. That's just compounding the dollar lower. The euro is testing 109. Pretty key resistance right now. Sterling is getting back up towards 128. The dollar is slumping a little bit here. Last week's numbers got revised lower. Canadian trade balance a little bit better than expected. So watch your dollars here. Watch your dollars. Watch your dollars. All right, guys. I'm just gonna say that tomorrow is gonna be a big day on here on the F.A.C.E show. Dale's gonna be guiding us through tomorrow's non-farm payroll as he always does. But make sure you get prepared early. Be on the Flow show with Ryan and Kman that you just listened to. They're going to be here. They're here every morning, really early. Well, really early for Dale and I on the Flow show. Make sure you guys are listening to that show. It is free. And then also just a reminder that our summer sale is over, and there are. I'm going to tell you right now. If you registered and got your semi-annual or annual subscription and you are in the running for a free $100,000 non-farm payroll account, we are going to be doing that drawing on the 10th, which is on Monday. You don't have to be here to be present to win, but I mean, it's pretty exciting because it's not like this is not like you're doing the lottery. What do they call the lotteries here in the US, Dale? What I don't super
lottery.
Oh, Super Lotto.
Oh yeah, whatever it is. It's not like you're trying to do that. There's only so many subscribers around, so you guys have a really good chance of winning. But for those of you that want to be inside of the ForexAnalytix community, it's only $1 for 10 days. So now you can jump back in and do your trial. All right. And actually,
don't forget the NFP competition that's up and running. We got absolutely tons of prizes. This month,
wait, real quick. Can you tell us about that? Let me see if I can pull up our while you're doing
links
it.
in the chat. The link's in the chat.
The link is in the chat. Okay, sounds good.
Yeah.
And tell us about it, please.
Yeah. So I'll go through it quickly because I don't want to impinge on Dale's interview.
He's not here, Ryan, so go ahead.
Okay.
All right. I'll take an hour then. Thanks, Dale.
All right, buddy.
Yes, we're giving away lots of prizes. We've got a free 30-minute trader coach session with one of the ForexAnalytix team of your choice for first place. You'll also get for first place a free month at Live Squawk. You'll also get 30 days at ForexAnalytix. You'll also get a free annual subscription to Peak Suite. I don't know if you guys know about those guys. We're doing a lot of stuff with those people over there. Got a great news aggregation platform. Second place, you're gonna get the 30 days, 2 weeks Live Squawk, and again an annual sub at Peak Suite, and then similar prize for third place. So tons of prizes this month. Don't miss out. Guesses only on that tweet.
Just as a reminder, you guys, when you're answering this to register, you have to be. I know you put in the link, so I should probably just look at the here. I'm going to do it this way. So you actually have to answer to this tweet. Tracy said less than one. Oh, wow. All right. Well, yeah. Anyway,
hang on, have I put the wrong link now?
Oh, you put in the wrong link there, Ryan. Thank you, Ryan, for doing that.
Yeah, try that one.
All right, here we go. Here it is. Okay, so this is the one. So you have to respond to this one.
Scroll up. I don't know why is it doing that? that thing.
Yeah, it's not showing. It's interesting, but people are. Here's the post.
Oh, you
No.
got replies on. That's why.
Huh?
Well, what's going on?
No,
Twitter's
but
broken
this
again.
is what everybody's
Your own
answering to.
profile.
But this is what it's in here. It's just wanting me to respond to my own profile. That's what it's doing. But
Yeah.
but you can see everybody's guesses. I think I guessed 90. Did I guess 95,000, 93,000? 93,000, I think is what I did. I think I did 93,000. There's more
Yeah.
replies. So you guys are going up against all of these people right here, and you have to respond to that tweet. So there's a lot of guesses going on right now. But Tracy just guessed less than 1,000.
Wow.
Wow. Shy girl. Wow.
Yeah.
Wow. That's something. Anyway, hey, the euro dollar really stalling at the 109 level, just so you guys know. Remember, we have the ECB press conference coming up in 10 minutes. And so with that being said, Dale, thanks for guiding us. No, your person isn't here. No?
No, Michael Kramer didn't make it.
All right. Well, that's a rarity. And
Yeah.
sometimes life does happen, but don't worry, guys. We'll be back here tomorrow, and we'll be in the chat rooms talking about the ECB in just a few minutes. So we'll see you guys and gals there in the chat room. So thanks, Dale. Appreciate you,
welcome,
Ryan. Kman, thank you so much.
Yeah,
Cheers,
guys. Yeah, get ready, get some sleep tomorrow. Have your battle dress on, and let's all react to the reaction. And thank you, Ryan and Kman. Everyone out there, it's our hope that we're adding value to what you're trying to accomplish. And if we are, use some of that value to get inside the community and the chat that Blake features daily. There's good stuff going on there that you're missing. And that's a wrap. Invest in yourself and don't just count your pips, count your blessings. Adios, Dream Team.
Audio.